Excellencies, ladies and gentlemen, we are marching very quickly towards lunch, but we have one final session before we do take lunch. And this is the session that throws this whole thing forward. So hopefully, with a little bit of pressure from me, we're going to have some predictions from our panelists in this last session. It's also an opportunity for you all to choose your position. Because I'm going to put the poll up in a second. Oh, there it is. In fact, this is the polling question, and you'll notice there's only two options here. So you have to take a stand now with this polling question. What does the future hold for traditional banks in the financial services industry? They will mostly adapt and retain their dominant position. They will fail to adapt, and we will be displaced. We do want you to take a position on this, and if you could do that as quickly as possible, that'll then help inform this discussion with our guests. As I said in my opening comments this morning, the word future, of course, appears in the title here, Shaping the Future. It's very important that it is going to be a very prominent piece of this session, which also will be a wrap-up, but the clue very much is in the title, Financial Services at an Inflection Point. What does the future hold? Our final session of the day, let me bring up the speakers to join me on stage. His Excellency Rasheed Mohammed Al-Maraj, Governor of the Central Bank of Bahrain. His Excellency Abdul Aziz Al-Ghurair, CEO Mashreq Group. How are you? Good to see you again. How are you? Dr. Mann, Global Chief Economist at Citibank. And finally, Ms. Shaikha Khaled Bahar, Deputy Group CEO at the National Bank of Kuwait. Hi, Catherine. Hi, Shaikha.
Hi.
How are you? Please take a seat. Good.
Hello, Shaikha.
All right. Hopefully, you've all had a moment to
Hello.
to take your position, to choose your side. We'll pull up the results of that in just a moment. But let me get straight to our panel. And I will start, I think, let me see here, with Mashreq. And the question I will have for you, it relates more to the customer and asks, what does a future banking customer look like? 5-10 years from now, what does the customer look like? How different does the customer look from now?
Well, the customer in the future will not be just happy to come to us for just a banking solution, to place money or to borrow. I think the future customer wants the total ecosystem. So I should be the almost a wholesale provider for a customer. If he wants his mortgage, it's not only good enough, I give him a mortgage solution. I should develop total ecosystem, which means arrange insurance. If he wants a furniture, I can guide him, give him the option where they can buy furniture. You know, if you want housekeeping, landscaping, total solution for a customer is what they want. So that total ecosystem is a must. And if we stay in only offering banking solution, we'll be displaced.
Your Excellency, with that in mind, will the regulators have adapted, changed, evolved enough to cater well enough for what the customer needs?
From where I said, I think we are a little bit behind. And my own experience, for instance, when we embarked in Bahrain 3 years ago on this FinTech journey, it was obviously a difficult task for us because it was about changing the mindset. And changing the mindset within the central bank and within the industry is the biggest challenge we faced over the last 3 years, because things within the central banks, in general, as regulators, we think like a police. We want things under control. We want things that is well under our supervision, and we want to manage the pace. So if this mindset does not change in the future, it will be very difficult for the regulators to operate with the challenges that we have discussed this morning and presented by my colleague, Mr. Dr. Al-Hashim.
Let me though push you a little bit on that. You talk about the need for a change in mentality, and I guess a change in culture goes hand in hand with that as well. One of your colleague, His Excellency from the Central Bank of the UAE, in an earlier panel said technologists don't really want to work for the central banks, for the supervisors. That's one way of changing the mentality, one way of changing the culture. How hopeful are you that it's something that can be achieved over the next 10 years?
Look, my job as a regulator is to set the vision, is to be the leader, and to be the enabler and facilitator. I don't profess to understand all the technology available now, blockchain, artificial intelligence, all these sorts of things that will come on board as we move along. If I get bogged down into these things, I will have this inhibition, the what, the buts, what if. So we get bogged down into the details, the technical details that will distort the bigger pictures. So where I sit, I want to draw the big picture, the vision, to make sure that the FinTech, the new ideas, the technologies can evolve and can work in an environment that will bring and deliver the right products to the people. It pains me when I go around and see things like in India, for instance, where is the grocer and the taxi driver and the one who sells tea in the streets use all this new technology. And we cannot provide it here in our country.
Okay.
And what I said to them, whatever works outside, I want it to work in my country.
Yeah. Are you hopeful? Are you optimistic?
Well, we have seen some progress so far.
Yep.
You know, when we opened our regulatory sandbox 3 years ago, we have now 35 companies, 2 already graduated, one of them for open banking, which we started end of June. So the banks are under tremendous pressure because they know the central bank, if they are not providing the service, we will allow non-banks to provide the service. So we are not waiting for the banks to wake up and move forward because it's about the future of our economy.
With that in mind, Shaikha, let me bring you in here and ask you whether you think your industry, the finance industry, the banking industry, can compete with big tech, can compete with the internet giants. 5 years down the road, again, remember we're throwing this forward, we're trying to take a stand here. 5 years down the road, 10 years down the road, what does your bank look like?
Well, basically, the disruption of technology is shaking up the whole world, not just banking industry. The change in industry used to be, in a very slow motion. Now it's an hourly basis. So I believe we're going to see a completely different marketplace. I mean, banking, I'm damn sure going to be looking differently. Clientele base going to be different. I mean, for this part of the world, I mean, GCC is a very young population, 60% of population below 30. This means that requirements of these clients, and unless we know the trends in the market, we cannot, offer the right services and the right products. So basically, I believe the banking industry gonna be in financial inclusion, very innovative in terms of products. Products and services would be digital end-to-end. It won't be anymore, branches or human element dealing. It's going to be robotic. As you see, the RPA is taken over, and we are in MBK. We already started, and this will put pressure even on human capital.
Yep.
And we need a different, skill set, and we can even go up to the education. Does the education provide the right skill set that we need? So it's banking, it's the environment, it's the education, it's the client. It's going to be a completely different world. This is my belief.
Yep.
It's
Yep.
not. It won't be as is today.
And we will come back to it. And Catherine, I promise you I'm going to bring you in just a second, but I know, Mr. Ghurair, you wanted to say something.
Yes, I think our regulator did, we protect us and make sure there is no license given to more banks in the region here. So we have been protected by our regulator, but I think the future will be the threat from big tech. And now for banks to survive, we really need to think we are a big tech with a license. Now we keep thinking we are a bank license using technology to operate. So that myth we have to get out, and we think to really compete with a big tech is a big tech with a banking license. And I believe also we need to change the mindset of our people and the staff we have. Banks will only work as a big tech if 30%, 40% of their recruitment comes from technology background. Today you have to have a finance background, you have to have marketing background, and we want to force this guy to think and work like a big tech. Doesn't work.
Yeah. Okay. Catherine, let me bring you in. And yes, I'm going to ask you to look forward, and I'm sure you're asked this a lot, and I asked it, now dwelling this morning, over the next couple of years, are we going to see an event like we saw in 2008? His response, as I'm sure you heard, was, look, it won't be the same. Could we, over the next 5 years, see a Silicon Valley-led crash in the global economy?
So that's an interesting question, and I want to bring it back to the question about are banks big technology companies that are going to be licensed like banks, or are technology companies going to be licensed, going to become the bank? Because I think that's an important question, and it will frame whether or not the next crisis comes from technology companies failing like the banks did in 2008. So I think the question is that you've got a bifurcation between consumer-oriented banks, which are very much exposed to the digital transformation, but they are not systemic in the global sense. The technology companies right now are not systemic from a financial standpoint. We still have the very large banks, which, because of the regulatory response after the financial crisis, also are not systemic anymore. So you don't have the same sort of systemic features in the current environment as we had that precipitated the global financial crisis. Doesn't mean that you might not get there. And you might not get there, you might get to a systemic crisis going forward if we fail to recognize that the systemic nature of the crisis came from networking, unknown networks. In other words, we had no idea who was borrowing from whom and who was lending to whom. There was no information. That can certainly happen again. Number two, leverage. Leverage was a key ingredient in 2007 in exacerbating what was the crisis. Do we have a lot of leverage right now? Yes, absolutely we do. And then the third element that was key in the financial crisis was the nature of the obligations. In the financial crisis, it was principally mortgages that were packaged and everybody thought they were AAA and they weren't. Is that same kind of non-transparency about the risks in the system, is that true today? We think that there's certainly some, definitely some questions about that non-transparency today. So each one of those elements, networks, leverage, non-transparency of credit risk, every single one of them is present, but they haven't quite coalesced yet in the nature of clear and present danger.
Let me ask you this, would an adoption of Libra or a system like Libra make a global crisis more likely?
Yeah. So Libra has a number of different elements to it, but the fundamental problem that might yield a crisis-like atmosphere is if everybody who was working within the Libra system, working with the Libra coin, you know, they can't transact with everybody because actually not everybody's on Facebook. And so the problem becomes when you want to leave the Libra currency and make a transaction in a different currency. That, I think, is a exchange rate. It's an exchange rate. We know that exchange rates can cause problems when they move more than you thought they were going to. So that's, I think, the fundamental question that I have about Libra.
Did you want to come in?
No.
No, Your Excellency, I tried this with the UAE Central Bank Governor earlier, but again, because we're throwing this forward, let's hypothesize. I know it's a little unfair to ask you to do this, but and imagine something like Libra has been adopted in some shape or form. How does that change things for the regulator?
Look, the regulators will always concern about the safety of their local jurisdictions. And if Libra or any other cryptocurrencies will come to create any challenges for this financial stability issues, because we look at these currencies or these cryptocurrencies at normal situation when things are going well, there is no issue of systemic risk. But at the time when a crisis, when you need the bailouts, when you need to have the central bank deploy all their possible weapons in order to mitigate all the risks, these cryptocurrencies will not be there. So unless we have all the elements that will give the individual regulators the flexibility to manage during crisis, because nobody remembers the central bank during normal times.
Right.
Central bank comes into play when there is financial crisis. And historically, the rise of the central banks came after financial crisis.
Yeah, unless, of course, and correct me if you think I'm wrong, the central bank, the supervisor, the regulator, wants its legacy to be 10, 15 years down the road. We were the regulator that allowed this ecosystem to flourish, and look how wonderful this has been for the global financial system, i.e. not in a time of crisis.
Yeah, that's what I'm saying. I'm saying we think only now because things are moving without any problems. But I think we should, at the other side, think, what happens if there is a crisis? When there was a financial crisis in 2007, 2008, there was an active role from all central banks around the world. But if you assume, will Facebook come to the rescue? How this type of crisis is going to be?
Let me, if I can, pull up the results of the question I put at the top. I forgot actually, I wanted to inform this discussion a little bit with the feeling of the audience. Maybe we can pull that up. There you go. The question was, what does the future hold for traditional banks in the financial services industry? They will mostly adapt and retain their dominant position, 81%. They will fail to adapt and will be displaced. I mean, it was a pretty big gap there in the result, but also it was quite a leap from one to the other. I guess we shouldn't be surprised by that. Let me ask from Mashreq's perspective, how much talk is there in your bank, and I'll ask Shaikha the same thing to you in a second, of what do we do about big tech? Can we compete with them? Look at what Apple's doing, look at what Alibaba's doing. You know, FinTech aside, what can we do about these guys?
I think banks have to rewire the total processes. I mean, this morning you asked how the bank should look like, whether according to customer segmentation, product and services distribution, or internal process. And I disagree with all. All are wrong. It should be we should look after customer experience. Banks should be structured around customer experience, not product. We should not go by product or by services. How is my customer experience? So in Mashreq, now we have a customer experience manager for every experience. How do I manage it? So we have rewired the back office from front to end, from sales, compliance, credit, operation, technology, one team. They are structured on agile mode. So no these silos, and no division. It's all around customer experience, and I think that's going to make a complete difference.
And Shaikha, yeah, sorry, Catherine, coming in.
So I think that the problem with that question was, what is a traditional bank? I think a customer-facing bank that deals with one-on-one with individual customers, those banks are tremendously at risk. For exactly the reasons that the mobile payments, everything's on the app, you're offering a wide-ranging solution for an individual customer. But if you define the traditional bank as being the institution that serves a global client, business, not an individual consumer, but a business that has a wide range of needs, trade finance, investment banking, bond support, foreign exchange transactions. That is a very different entity. And although there are fintechs that are eroding individual elements, the large multinational organization that works with the global companies offers economies of scope in terms of what it does. All of these ranges of services that are synergistic to the customer, but they are also the business customer, but they also are synergistic internal to the organization. No fintech activity has replicated they've replicated some, but none of them have replicated the set of activities that a large multinational institution has done. And so that's the definition. If we think of traditional banks as being, large global banks, they are in a very different competitive situation vis-a-vis each other and vis-a-vis tech than a customer-facing, a small customer-facing institution where they are much more at risk from the competition from fintech.
And yeah, Shaikha, let's throw that forward. How does that change if it changes?
Let's differentiate between, wholesale banking or the business banking and the retail and even wealth management. The fintech is, now getting involved in basically dealing with individuals and consumer and retail banking. The challenge for big and global banks is to get into the fintech or the digital banking in I mean, the wholesale, but we have no option, and there is no other way for banks except to be in digital for dealing with consumer, even wealth management. I mean, in our investment arm, MBK Capital, we are offering the Smart Wealth, which is end-to-end digital, end-to-end to manage the wealth of the high net worth clients and even the affluents. So basically, the future is for the digital banking. We in MBK embarked on a major project which is established in Kuwait. It's the Digital Lab, basically on group-wide level. We will start in different markets, but as I mentioned, I mean, the future is basically in digital banking. As you rightly mentioned, the mega projects and the big projects and the wholesale banking will continue to be in traditional banking, but I believe one day it will change and will go to the digital in certain issues like execution of some of the transactions, even in the credit. I mean, the RPA now, credit operation is the target, and other businesses. So we cannot ignore the trends in the industry, and unless we monitor it, we study it, we will be dinosauring. Banks maybe will disappear if they do not follow the change and they transform to a digital bank. One day you will not deal with a human. You will not deal with a human. I believe even in certain, services and products for wholesale banking, it's coming. Maybe not in our life, but but as I see it, it's coming. I believe in digital and FinTech and the future of banking.
Okay, Mr. Al-Ghurair.
Yeah, I mean, we launched our digital banking last year, and we had a choice to use our existing infrastructure, the dinosaur, His Excellency called it, or we use completely a new platform. So we choose to ring fence our digital team completely and isolate them from the traditional bank, and we were able to launch our digital banking solution. And today we acquire the customer digitally. We only see him once in our lifetime when his Emirates ID, and everything else we do with him is digitally. So if we have used our old dinosaur banking system, we will not be able to, because everybody will say it's impossible. So rewiring the back office is important. So today, 60% of the personal banking new to the bank in Mashreq is acquired digitally. So totally digitally. So it is important to get your system sorted out. And in the past also, we were also protected. It takes 1 year to launch a product. So we have plenty of time. Today, with the new technology, we're following the core. We're no longer dependent on the core. Everything is stripped out from the core. We're using API, microservices, which allow us to launch product almost on a monthly basis. So speed to market is becoming so fast, so it's scary. If I don't do it, my next door competition will do it and he will be out of business. So the technology is so fast now, it's scaring us if we stick to our old model. So we have to scrap our old model and go to adapt to a new model.
Yeah. I'm very wary of the time. We've only got a few minutes left, but let me another big question to you, Catherine. Could FinTech, the continual rollout of these sorts of technologies and these products, could it in any way change the US grip on the global financial system, the status quo that we see currently in terms of who controls what, and money flows, et cetera, et cetera?
That's an interesting question that, you know, you're suggesting that the U.S. controls the global financial system. I mean, you control the global, any entity controls the system by being better at it than anybody else, and by having more customers than anyone else, and by having a better use of their capital base than anyone else, and by having fewer non-performing loans or evergreen loans than anybody else. And so all of that, all of those things are challenges facing other banking systems. Other banking systems that are from advanced economies in particular in Europe and Japan, and of course in other countries as well, but those are the current challengers. So the issue is how to use these technologies to do a better job at giving you a return on your capital base, because we do have capital. We're required to hold capital. Comments earlier in other sessions about how, you know, some fintech firms don't have to have capital, and so the sort of the unevenness in the regulatory landscape is certainly an important question. But how do you use technology to, you know, get rid of your NPLs faster, to make sure that you've got your synergies across your client needs, so that you're maximizing your capital base and delivering the services that the client wants, the range of services that the client wants. As I say, it's a whole menu of what a big client wants, and that's what a big bank can do. So the key is how to use, I mean, everything's digital. Everything was going to be digital. But it matters how you put the pieces together to generate these synergies that will generate the greatest return on your capital base by creating the greatest efficiency and use of delivering your services to your clients. If you do that better, then you will continue to be whoever does it better, whichever landscape they're in. They will be the ones who control the financial flows. Yeah.
Interesting. All right. Look, I've got one final question for each of you, and I think this is how we can end on a looking forward, taking a little bit of a stand, if you like. You know, I wonder when we're sitting here 5 years from now, what the title of an event like this will be. And I literally, just listening to you, was sitting here thinking, you know, perhaps it will be something like how the big banks rose to the challenge and thrived in this environment. So let me throw that out there and ask you as a final question to each of you where you see the role of the regulator 5 years from now, the role of the, I hesitate to use the word traditional bank, but the incumbents like yourselves, and then let's talk about your prediction for the economy 5 years out. Let's start with the regulator.
No, I think we will have a huge challenge as a regulator to see all these technological developments coming through. You know, when you talk about artificial intelligence or Internet of Things and robotics and all that stuff that will replace many of the human involvement into this play, I think it will make it a different ball game for us. I think the role of the regulators will be different. The role of central banks will be different. Because how are you going, you know, I think some of our role will be diminished. How are you going, you know, if Libra does not come this year or next year, it will come eventually in different forms by the services offered now by Apple or Samsung or WeChat Pay or other things that will beyond your local jurisdictions, that will be offered services to your customers, to your citizens, and you have no control on them. So the role of the regulators will definitely change. And this will, we have to reinvent ourselves. We have to, as I originally said in the beginning, you know, the regulator should be the facilitator and should be the place where the players come in and have the friendly ecosystem in order to make the economies throw, regardless of the risks that we usually talks, we talk about cyber risk. Cyber risk will be with us, whether we like it or not. And we better manage it. But we are not going to eliminate it. And there will be other risks. I give you an example, for instance. If the driverless cars start coming into a bigger challenge, what's going to happen for the insurance industry? If there is an accident, who will be responsible? The operator of the network, the owner of the car, the manufacturer. So these things will pose serious issues for us. And this is just a very tiny thing. There are many other things that will replicate in different aspects in our life. But this is a changing world. And technology is going to be the biggest player in our life. And we have to be prepared for it.
And it's a fascinating comparison, and one which we could spend the second half of the day discussing. So thank you for that. Shaikha, I do want to come to you next, and let me put the question to you this way. 5 years from now, do we bill you as someone working for a technology company or a bank?
Well, I really challenge anyone who will say that I can come up with the right plan and vision within the coming 5 years for a bank. Due to the change in technology, the whole world is changing on hourly basis because of the technology. We used to come up with a 20 years vision and 5 years plan. Now it's becoming very tough. And banks are not competing with banks. We are competing with non-banks. Non-banks have no regulation whatsoever, and the whole world is open for them. I mean, borders have, knocked down because now banks are not competing with domestic banks and even not regional banks, but we are competing with the international banks. So it's very challenging to come up with the right strategy or plan for the coming 5 years. You have to review your plan on a regular basis. Reading the trends, again, data analytics is very, very important to read and know about the client's behavior and the change in the pattern and behavior of these clients. As I said, now we are talking about retail banking, we are talking about investment banking, but believe me, the whole industry will change. I don't think that banks will continue to be the same. And you will see mergers, not between banks, FinTech companies and the banks, maybe
and throw in the telecoms, as we heard earlier.
Exactly. I'm going to tell you an interesting story. We used to do, strategic sessions offsite. And we were in Lebanon for a strategic session. This was 1995. And I remember I told our group CEO, why don't we acquire a telecom company? It seems it was a silly idea. We were thinking out of the box. This is the purpose of the strategic session. So, I mean, as I said, within the coming 5 years, it's going to be a completely different marketplace, and hopefully with a completely different regulators and government. We need legislations, we need laws to govern the whole digital world.
Go ahead, add to that.
Yeah, I think the future of the bank in the next 5 years will, if we have to be successful in our digital transformation, I mean, we have to change our culture in the bank and basically get our employee ready for the digital transformation. And sometimes it's not the junior or the middle management, it's senior people like us, me and Shaikha, are the problem, because we dictate issues and we don't know about the issues. So we're putting the entire team in Mashreq, senior team, on technology training. I mean, we'll put them under agile training. We will put them under Python training. We put them under artificial and advanced analytic training, because those top senior team we have, they don't know this. And if they don't know this, they make the life of our team miserable. So getting the culture right, and retooling, reskilling our existing people ready for the challenge ahead of us 5 years ahead. And we have to be also ready that, technology, digital transformation will reduce our number of staff. It is expected. If you are successful in the retail banking, in the next 3 years, 40% of your staff or 40% of your jobs will disappear. Artificial intelligence will take over. Chatbot will take over. I mean, today in Mashreq, we do our check clearing system through artificial intelligence. No human being. This small machine learning, and it's done. So I think we have to get ready for this kind of a mindset. And today we are recruiting different kind of people that we need to the bank. So head of digital strategy. We are talking about head of cloud. We're talking about data scientists. Jobs did not exist 3 years ago. Today we are looking out for this kind of talent, which is very hard to find.
Yep. And thank you very much. And finally, Catherine, I get, rather than, I've asked you to throw this forward and look at whether a Silicon Valley crash or any kind of crash can happen over the next couple of years. Let me ask you this. Did you ever imagine when you became an economist that you would also, at the end of the day, have to be an expert in understanding technology, artificial intelligence, the Internet of Things, machine learning, and the way all of this is processed and used by big business and ultimately by economists when they put their models together?
Well, so the way we think about doing macroeconomics these days, the macroeconomics being inflation, unemployment, exchange rates, growth, the only way we can do research on that, and the only way we can understand the dynamics of those big macro variables is by understanding the microeconomics of the businesses underneath them. And that's, whether I knew I was going to get involved with understanding AI or not, they didn't have AI back then when I went to MIT, but understanding the microeconomics of business behavior, the microeconomics of consumer behavior, how they react to the policy environment, whether it be regulations, whether it be other types of policies, understanding that incentive structure, understanding the reactions. At the micro level, you build that up to get the macroeconomic outcomes.
All right, very good. Finally, very finally, the poll, you don't have to put it up, but I can tell you now, it's shifted a little bit. I'm quite surprised by this. A quarter of you now believe that banks will fail to adapt and will be displaced, which I think is quite a high number. Let me leave it there. I want to thank you all very much indeed for your participation. It's been another really, really good session. A round of applause, please, for our final panel. Thank you very much.